let's look at the circumstances deeming an asset as disposed of. So when do we say that an asset has been disposed of when it comes to the matters of capital gains tax? So an asset is treated as disposed of or is considered disposed under the following circumstances. First, when it is distributed by a company to a shareholder. So if a company gives an asset, for example land, to a shareholder instead of cash dividends, then it is considered sold or disposed of. For example, if a company gives a shareholder land instead of paying dividends, the land is treated as disposed of at its market value. Yeah. Then the second circumstance is when it is transferred as a gift by the taxpayer. So when the asset is given as a gift, if a person gives away an asset, it is considered as sold off for tax purposes. For example, if a business owner gifts their commercial property to a relative, tax is based on the market value of that property. So if it is transferred as a gift by the taxpayer, it is considered as disposed of. Then the third circumstance is when it is destroyed or lost. It can be due to accident, fire, or theft. So if an asset is lost due to an accident, fire, or theft, it is considered as disposed of. For example, a business warehouse burns down. The loss is treated as a disposal event for tax purposes. Yeah. Then another circumstance we have is when a taxpayer converts an asset from taxable to non-taxable use, or vice versa, from non-taxable use to taxable use. So in such cases, the asset is deemed as disposed of at its market value. So if an asset shifts from being taxable to non-taxable, or from non-taxable to taxable, it is considered sold off or disposed of at its market value. For example, if a business owner converts a rental property into their personal home, then it is considered as sold off or disposed of at its market value. Then another circumstance we have is where a non-resident person becomes a resident and all the assets are deemed acquired at the market value. So if there is change in residency, when a non-resident person moves to Uganda, all their assets are considered newly acquired at market value. Same as when a resident person becomes non-resident, all their assets are considered disposed of